If there's one thing that I've figured out in 4+ years of trading, it's been that I know what works and I know what doesn't work. I know what actually matters and what is a just complete waste of your time. I started out like most people. I was jumping strategies. I had no idea what I was doing. I just kept researching new strategies, new YouTube videos, all those kind of things that got me absolutely nowhere. Then I focused on building one system, one trade type, okay, a plan, a rule book, all those kind of things that set me straight. And that's when it actually started working. I was actually being a profitable trader. I was actually making money. I was actually making money from prop firm accounts, a few simple switches in my trading and my strategies and all those kind of things. And I became profitable. I was making money. Whether you're already trading, whether you're starting out trading, or you've been trading for a few years now, I'm not going to promise you anything fake, okay? But if you take notes on what I'm about to share with you, there is no reason why you can't shave off 1, 2, 3 years off your trading journey to become profitable quicker. So here are 10 things I would tell myself when I'm starting out. And the last one is by far the most important one. All right, first thing I want to start off with is know your edge, okay? If you don't even know what you're doing, if you don't know what you're trading, and if you're just unsure of your strategy in general, you don't have an edge. You don't have a strategy and you won't be able to make money, okay? So you need to know your edge. You need to know your strategy. If you can't explain why it wins, then you're gambling with extra steps, okay? And if you can't spot it within seconds, it's not a trade, okay? It's not a trade you should be taking. If you've got to start thinking about it for 5, 10 seconds or whatever, forget about it, okay? It's obviously not part of your plan and you shouldn't be trading it, okay? So these trades here, these are some recent trades that I'd taken on my live account, okay? I'd made money from them. And for me, I can spot these setups instantly, okay? This takes me less than 5 seconds. This takes me 2 seconds to look at the charts. I can see what is required for my strategy, okay? And I can take trades from it, okay? Simple as that. If there's trades out here that look very similar, but I've got to think, okay, was this really a break of structure, or was this really a market shift, or is a trend actually going this way, or whatever it might be, you know? I don't take the trade, okay? If it took me too long to figure out and try and convince myself that it's a trade, then it's not a trade, okay? So know your edge and know what your strategy actually looks like on the charts. Stop judging a strategy on a single good month, okay? One winning month, it proves absolutely nothing, okay? Genuinely means nothing. 1 month, who cares, okay? One losing month also proves nothing, okay? The point I'm trying to make here is you have to give the process time before you trust it or trash it, okay? Trust or trash, all right? It needs time. Everything needs time, okay? If you started trading from this month here, from January, and you had a losing month, what are you going to quit straight away? Like, that's not the way you should be trading, okay? That's not the way you should be even approaching life, all right? And then if you started off, let's say in your second month, you were profitable, all right? Doesn't mean anything. Doesn't mean that it's automatically going to be a profitable strategy. Automatically means that you're going to have green months for the rest of the months for the rest of the year, okay? Doesn't mean anything. These two by itself doesn't mean anything. But when you're looking at it over months and months, okay, and even years, you can see, okay, these are the amounts of months that I had that were negative, okay? And then you can see these are the months that I had that were positive, okay? From here, I can determine my win rate, how much I should expect to earn per year, okay? And what my overall equity curve will even look like, because some equity curves may look like this, okay? Slower and steadier growth. There are others where it's a lot more choppy, but it still grows, okay? You need to know how well your strategy performs, okay? And the only way you can do that is giving the process time, okay? Proven over years, not over just a single month or even just a single trade, okay? That doesn't mean anything in trading. Bad risk beats you before a bad setup does, okay? Most blown accounts, okay, whether that's prop firms, whether that's your live account, okay, or you're just in heaps of drawdown, it's not because of the strategy. It can be also because of your bad sizing, okay, your bad risk position, all right? Me personally, I risk 2% per trade, but anywhere within this sort of realm, 0.5 to 2% is pretty normal, okay? Anything really above 2% is probably risking too much, okay? If you're risking, like, let's say 5% per trade, you go on 3 losing trades in a row, you're down 15%. Okay, that's a big amount, all right? And a lot of people just cannot stomach that, especially new traders, all right? So whatever you do, pick it out, keep it consistent, okay? It's fine to change it once a year or once or 2 times a year, but don't be changing it after every trade, okay? Where you've hit a few winners and you want to risk up. Don't be doing that, okay? So just keep it consistent. And no revenge sizing, okay? So just keep it consistent. Doesn't matter if you're in deep drawdown here, okay? This is your equity curve. You shouldn't really be just trying to risk more just to get that equity curve up in the right direction, okay? Just keep the sizing consistent, keep the risk consistent. An oversized win feels great until the one that erases months, okay? So let's see here, steady 1 to 2% risk, okay? So let's just use 1% risk, all right? So you're growing your account month by, let's say 3%, okay? Very average returns. So we got 3%, 6%, 9%, 12%, and then you decide, because you're having such a good winning past few months, okay, you're going to start risking a lot more. You're going to start risking, instead of 1%, you're going to be risking 5%, okay, or even 4%, whatever it might be, okay. Let's go with 5%. You have 2 losing trades, and you're basically erasing all this hard work that you've done, okay. You're putting yourself in a position where your equity curve looks like this, where you've slowly grown your account, okay, and you're back down to here, all right. That's not ideal. Okay, you don't want to be doing this. Yes, of course, drawdown is normal, okay, but this kind of drawdown is normal, right? You know, and then it goes up. Having drawdown like this is not normal, okay? Even drawdown like this back to where you started is fine, all right? Because if you can consistently keep your risk the same and you have an edge, you're gonna be profitable, right? You're gonna be up. But starting to risk so much to the point where your account goes to this level, not appropriate, okay? Not ideal, all right? So don't risk way too much, all right? Risk appropriate and a steady amount. Losing streaks are a part of the job, okay? There are not strategies out there that are 100% win rate, okay? You will have losers in trading, okay? So my strategy runs at about 30-35% win rate, which means that a decent amount of trades lose by design, okay? There are a few break evens in there, but the actual winners are around 30-35%, okay? So about a third. That's why, that's the system working exactly as it's built, okay? Exactly how it's meant to be, okay? That's totally normal, okay? So without even using any break evens here, because a few of these would actually be break evens, we're just gonna run a scenario where it's just all losses, okay? Basically a worst case scenario, okay? So what we can see here is we've got -2, -4, -6, -8, -10, and then we've got -4. Okay, so we're risking 2%, -4, and then back to -6, -8, -2. Okay, and then -4 plus 6. So we've got a total of 2%. Okay, so even with every single one of these losses, okay, look how many losses there are. 1, 2, 3, 4, 5, 6, 7, 8. Okay, there are 8 losses here in total. All right. And we're still making profits, even though this looks nasty. This looks genuinely nasty. Look how many red circles there are. Look how many losses there are. Okay, but a few good winners. Okay, only 3 winners here in this whole sample size, and we're still up 2%. Okay, so losing streaks are totally normal. Okay, you can't avoid them. Even in this scenario where you've gone through a losing streak, even these first batch of trades here, this is all losing, okay? Overall, this is losing, and this is the one that put them over, okay? My point being is you could have all of these trades here, being in a losing streak or to a point where your equity curve looks like this, okay? Well, this is all losing. Anything under here is technically losing, okay? Let's say this is $100, and you're down here at $90, and then this plus 6, it's put you positive, okay? This part here, totally normal, all right? It's by design, you can't avoid it. So losing streaks, understand that they are totally normal and they are part of the job. The rules are the scorecard, okay? Not the results. A good trade can lose, okay? And a bad trade can win. Following the rules and losing is just variance, all right? If you're following your rules, you're following your plan, okay? Losing is just simply statistics, okay? It's just variance within your strategy, all right? A lucky win of broken rules, it'll put you down the wrong path very, very quickly, okay? Because then you think that it's appropriate to start taking these trades that are not a part of your plan at all, okay? And then you're starting to trade random things, which is just gambling, okay? It's just total gambling, okay? So here's what it looks like not following the plan, okay? So you've had a few initial successful trades, okay, all right, and you're really feeling it, and it's going good for you, okay? So at the moment it's going good for you, but if you're not following your plan, you're just continuously gambling, this is what your equity curve will end up looking like, okay? You will start going down, you will not be making money, you will start stressing, you'll start trading differently. There are so many factors that go into this where you'll end up a worse trader, okay? All simply by not following your plan. All simply by not following your plan, okay? Meanwhile, following your plan, okay? Yes, you've been unlucky the first few times here, all right? But you understand that losing is just variance in your strategy, okay? As long as you're following your plan. And after a few trades, okay, let's say this is 100 trades here. After your first 30 trades where you're still gone into negative, your next 60 trades, okay, you're actually positive now. All right, so even your first 30 trades or even pretty much your first 50 trades, okay, 50 trades being this period here, it's been losing, okay? And then you've got to your 60th and then you've started winning. And then you've got to your 90th and you've continuously grown your equity curve, okay? And then you've got your 100 where you've grown it a lot more, okay? Because you've let the process play out, right? So that's why the rules is what you should be scoring, okay? Don't think about these random lucky wins and thinking that you're going to be making more money doing things like this with a lucky win. I'll tell you right now, you're not going to be, okay? You're teaching yourself the wrong lesson, okay? You need to be taking trades that are within your plan, all right? So understand that if you're following the rules, you're doing it correctly, okay? Doesn't matter if you're making money or not. It's the rules that you got to determine if you are trading correctly or not. A backtest with no losses is probably lying to you, okay? What point I'm trying to make here is be honest with yourself, all right? When you're backtesting, okay, and you've seen trades that should be losers, okay? So something like this where you're entering from this point and it's lost, okay? It's hit your stop loss, all right? And you've lost. Don't go out and erase that trade, okay? That trade needs to be added to your journal. That trade needs to be added to your backtesting journal. You have to be honest with yourself, okay? If you're not honest with yourself, you're never going to get anywhere. So if you've got a backtesting where you know you've been a bit fishy and you've been a bit dodgy, you've started removing some trades, some losses, and you started adding in some more winners that you didn't take, but you tell yourself that you probably would have, okay? That is the total wrong way to be backtesting, okay? My real win rate is about 30 to 35%, okay? Not 90%, not 99%, okay? So understand that losses are a part of the game, okay? And you have to be honest with yourself. An honest backtest is supposed to look average, okay? Not absolutely amazing every single time, okay? That's not what it's meant to look like. It can happen, obviously, okay? But if you're trading, let's say 1,000 trades and you're barely making any losers and you've got like a 90% win rate when in reality you probably shouldn't, because you've been dodgy, you've started adding in some more wins and you started removing the losses, that will only set you up to be a worse trader, okay? While with a proper backtesting, okay, imagine these as your months or your overall equity curve growth, okay? Where you've had winning months, you've had losing months, okay? But the winning months are bigger and you've actually just traded like a consistent, steady trader, okay? Not like this where, let's say this is in years, okay? So 1, 2, 3, 4, 5, where every single year you made like 200%, okay? Because you've cut out the losses and you've just added in some winners, okay? Doing this where you're making 30 to 50% per year, okay? Or 30 to 50 RR a year, where you've had losing months and you've gone through deep losing streaks, but you know that you've been honest with yourself. That's what really matters, okay? So don't fake it, okay? Don't fake it. Don't start removing losses and just adding wins, okay? Be totally honest with yourself. Be totally honest with your backtesting, because that's the only thing that'll get you far in trading. The more boring it is, the better you trade, okay? This is one of my favorite things that I'd learned when I was trading, because when I started getting bored, I thought I was doing the wrong thing, okay? But I realized that it's actually better for me, okay? I started trading better, right? So being bored in trading is a sign of deep progression, okay? The more stressed you are, the worse of a trader you are. The more you're emotionally attached to your trading, okay? We've got too many emotions and you're diving too deep into it. You're overthinking, you're overthinking, you're revenge trading, you're stressing because you don't want to lose. You're unsure of your strategy, okay? It takes you too long to see your setup. All of these things, okay? There's too many emotions in trading, okay? This will give you a small reward, or if not, no reward, okay? If you're bored, okay, you're not thinking so much, all right? You're just bored, okay? You just scan the charts, you see your setups, you place your orders, and that's it, and it's just boring. You'll have a way bigger reward, okay? It's funny how it works in trading. The less you work and the less you're involved in it, the more successful you will be, okay? High stress and emotion equals small reward. High boredom equals big reward, okay? It should feel like an absolute chore to trade. It should feel so boring to trade that you almost don't want to, or it's just like you just forget about it because it's just so boring. That is the right sign of being profitable, okay? That is the right sign of seeing your equity curve move like this, okay? Instead of being too stressed and overthinking trades and you've missed a few trades because you're overthinking them and all that, that's what your equity curve will look like, okay? When in reality, you want it to be looking like this, okay? Because you're bored, you're consistent, and that's it, okay? You're just being consistent. You're doing the same thing every day because and you're being bored about it, okay? The more boring it is, the better you trade. There is no speed bonus for getting rich faster, okay? Or getting to profitability faster, okay? Rushing to catch up is how disciplined traders start disobeying their own rules, okay? The markets, they're not going anywhere, okay? They've been around for many, many years. They're not going to disappear tomorrow, okay? There's no reason for you to need to be profitable by tomorrow, okay? Or make thousands and thousands of dollars by tomorrow, okay? There is absolutely no reason to be doing that. Impatience turns stuff like 2% risk or 1% risk into 5+% risk trades where you will ultimately regret it and ultimately be a worse trader, okay? The traders still around in 5 years are not the ones who rushed, okay? You think that the successful traders out there that you see on YouTube and you see on Instagram, you think that they rushed this whole thing? You think it took them 3 months to do it? That stuff took people years and years to do, okay? Like genuinely years, okay? Genuine years, 5 years, 10 years, 20 years, okay? Those are the things that make successful traders, okay? You don't see successful traders after 1 month of trading. Okay, it doesn't work like that. You can build the base up in 1 to 3 months or 1 to 4 months or whatever. But to be an actual consistent trader, you need a bit more time, okay? You need more than likely years, all right? So there is no bonus that you get if you're rushing and you're trying to get more profitable quicker, okay? So if you're starting off in trading, the rushing, your accounts will be blown, okay? You will be learning incorrectly. You will be making less progress than you think, okay? And overall, it's just not the correct thing to do, okay? But if you're starting out and you're slow and steady, okay, you're realizing a few points along the way, you're learning, okay, you're being consistent, you'll still be here as a trader, okay? You'll be rewarded as a trader, all right? So as the old saying goes, slow and steady wins the race. It's the exact same with trading, okay? You need to apply that in your trading life. Being mechanical beats having a gut instinct, okay? So mechanical beats instinct. Trading off feel is usually just inconsistency in disguise, okay? If you feel like this trade is going to go this way or that way, you shouldn't really be too emotionally involved in your trading, okay? It should just be so mechanical where it's just like this trade is either a trade that I'll take or not a trade that I'll take, okay? Like it shouldn't be any more difficult than that. A written checklist beats your gut instinct every single time, okay? Pretty much every single time. You should have a checklist, you follow it, and that's it. Rather than having a random gut instinct that you think that this trade will win, okay? Just because it might look better than some other trades, okay? That's not how it works, all right? You need a written checklist that you're following where it's mechanical, okay? You're being consistent and it's mechanical. Boring and mechanical is what actually makes you profitable. Okay, not having a gut instinct and not feeling that this is going to go to 1 to 20R or whatever. Being a mechanical and boring trader is where you want to be in trading, okay? Boring and mechanical. So the checklist, you've got all the things in your checklist, done, okay? I'm taking the trade, that's that, okay? There's no ifs and buts. Follows my plan, I take the trade. Versus instinct, should I take this trade or not, okay? Am I over trading? Is there correlation, okay? It took me 20 seconds to figure out whether this trade is good or not, okay? Just because I've looked too far back and I scrolled back 100 years and saw there's a liquidity sweep or blah 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 there. Like, no, that's instinct. That's trying to make something out of nothing, okay? You just have your checklist and you follow your checklist, okay? Simple as that. And now finally, my favorite, too many indicators, okay? 5+ indicators or however many indicators some people have. I've seen people with like 10 or 20, okay? Isn't more information, okay? It's just simply more noise on your screen, okay? How can you make a proper decision if your chart is looking like this, all right? Who even knows what's going on here? There's so many different lines, there's volume, there's moving averages, there's all this other stuff that I've never seen before in my life. It's just noise, total noise. This looks ugly. You can't determine anything of this. I have one indicator, which is my fair value gap indicator, and I barely use it, okay? I could definitely never use it again, okay? I've just had it for so long that I've just kept it. But that's it. That's the only indicator that I have, okay? And I would barely even call that an indicator. If your chart needs a legend to explain itself, then you don't have an edge yet. If your chart is so complicated to the point where it looks like this, okay? You have no idea what you're looking at. You have no idea where price could be going, okay? It's so hard to have a proper edge using this, okay? And I'm telling you, there's so many things in trading, okay? Too many indicators is one of the biggest things and the biggest issues that I've seen with trading. These are the things that I've built my entire process off, okay? And these are the things that I help my one-on-one students with so they can turn themselves from unprofitable and inconsistent traders to profitable and consistent traders making consistent money, okay? You can check out the link in my bio, a link in the description, and you can book a call with me and I can see if you're the right fit and if you're someone that I could help in trading.